today's discussion where we dive into the recent happenings around SoFi. Let's break down the essential data points and market activities that you need to know about. Let's dive right in.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi's price action remains a topic of interest as usual. Despite a generally positive market, SoFi closed 0.77% down, hitting a low of $6.38. The day saw heavy trading with 15.6 million shares changing hands, compared to the average of 30.8 million. A significant portion of these transactions on the secondary market exceeded $100,000, mostly sells, indicating consistent downward pressure despite a broader market rally. Today, the market responded to non-farm payroll data that exceeded expectations, with actual figures at 206,000 versus a forecast of 191,000. This data, along with a slight uptick in unemployment, influenced market sentiment. For the upcoming Federal Reserve meeting on September 18th, there is now a 72% chance of a 25 basis point cut, with a smaller 5.9% chance of a 50 basis point cut. These potential rate changes are anticipated to impact the market, with a 25 basis point cut likely to be well received. Interestingly, the Fear and Greed Index has risen from 48 to 54, indicating an increasing appetite for risk among investors. Despite this, SoFi continues to struggle, a sentiment echoed by many in the past. It's crucial to distinguish between a damaged company and a damaged stock. SoFi belongs to the latter category. Today, no major news came from SoFi itself, aside from some routine Form 3 submissions after hours, including registrations for General Counsel Stefan Simcock and 2 new board directors. However, the short-selling activity around SoFi has been significant, with shorts increasing by 6.99 million shares, bringing the total to 18.83% of the free float, equivalent to 195.49 million shares. The utilization rate stands at 67.73%, with a short score of 74.52, indicating a higher likelihood of a squeeze. Interestingly, there is a broker offering negative cost to borrow, meaning they are paying people to short SoFi, albeit only at minus 0.2%. This manipulation is evident in the trading volume, with 42.21% attributed to short activity and 39.24% redirected to the dark pool, indicating possible market maker involvement. In terms of options, today saw $2.14 million in calls and $1.19 million in puts, with 56% of the options being bullish. However, the increase in shorts suggests these were likely hedges. Open interest data reveals 16,000 contracts at the $6.50 strike price and 21,000 at the $7 mark, indicating significant interest in these levels. Last week's unusual activity around the 4th of July holiday saw reduced short activity, likely due to hedge funds taking extended breaks. However, today's surge in shorting underscores the persistent downward pressure on SoFi. Despite hitting home runs in their operations and likely posting strong earnings soon, SoFi's stock continues to face manipulation. With earnings at the end of July, there is potential for an uptick in the stock price, but given the recent manipulation, it's hard to predict. For long-term investors, this might be a good opportunity to buy at discounted prices or to sell puts and covered calls to capitalize on the volatility. An interesting idea for SoFi's leadership, particularly CEO Anthony Noto, would be to take a strong stance against shorts, potentially boosting investor confidence. As it stands, SoFi closed at $6.47, trading between its support at $6.39 and resistance at $6.52. The stock shows bullish signs on the stochastic chart, suggesting it is oversold, which might attract value-seeking institutions. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.